Hello, good afternoon, and you're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Shristi Sharma as well. Shristi, very good afternoon to you as well. Markets at least holding on to some bit of a green is always a good afternoon, right? It's not bad. We had seen that fall coming in last week, but Friday some bit of a recovery. Even today again that we're seeing Nifty holding on to 0.4% of gains as of now. Look at the Nifty, 19,130. So yes, comfortably above that 19,000 mark. So no worries in terms of that, because at one point of time in the day beginning, slight slip and then it went back again. You can see it on the charts as well. But again it recovered. Even the Sensex, similar trends coming in there. Now in terms of what's doing well sector-wise, we have Nifty Realty holding on to strong gains of 1.8% as of now today. And other than that, auto and FMCG, those are the laggards today in trade in terms of a sector-wise when you compare. Nifty Auto down 0.8%, while FMCG too is lagging in trade, down 0.3% in trade as well. What's interesting today, let's see some of the names that are doing well now. We have Intellect Design, BPCL, DLF, Mahanagar Gas on the back of its numbers, which is holding on to strong gains as well. While subdued trading sessions actually coming in from Mahindra, SBI Cards, India Mart, Intermesh. Obviously, all these will be covered in the show in the next 1 hour as well. But broader markets too, holding on to some bit mild gains over there. Not much of an outperformance coming in from the broader markets, whether you look at the Nifty mid-cap or the small-cap, a bit of an underperformance. And the advance decline ratio clearly in the favor of advances today versus declines. But on that note, let's get started with all the stocks that are buzzing in trade, either on the back of news flows or on the back of technicals. And today on the technicals, we're joined by Nagaraj Shetti. Nagaraj, very good afternoon. While from the research team, we have Ankita as well as Harsh joining in with us. Good afternoon to both of you all as well. And let me start with the first stock. Like I was mentioning, we have Mahindra Finance, which is a very subdued in trade. Look at the fall that I've seen coming in the stock as well. Down 10.7%. That fall has just increased when you look at it in terms of M&M financials. Now, what is actually happening? The NII, PPOP, PAT, all of them were weaker. Nothing exciting there. NIMs were weaker than expected. NIMs impacted was something that was impacted, leading to the NII also coming in as a miss. Now, what the management also said, some terms and commentaries that came in, that management expects improvement ahead. Going forward, the NIMs contracted by 20 basis points on a quarter-on-quarter basis. So that was a bit of a weakness there. On the asset yield side, when you look at it, the yields declined by 33 basis points. Quarter-on-quarter basis, mainly due to the higher share of dealer funding owing to the festive period, demand, as well as higher growth into autos and UVs, a lower yielding segment due to the high competitiveness is something that is overall impacting them on that side. While in terms of the liability side, also the borrowing cost is increased by 10 basis points versus management expectation of borrowing costs actually seeing a decline around the festive season. Management expects that NIMs could be at around that 6.8% at the end of FY24 and reach to 7% by FY25. Let's keep an eye out on that, but nothing exciting coming in from the stock today, down 11% as of now.
Okay, moving on to the next counter in focus, and that is Dixon Technologies. This particular counter is also seeing some profit booking, and that's after Elara Securities note where they have revised their rating as well as the target price on this particular counter. They've given it a sell rating with a target price of 4,460 rupees. That's substantially lower than the current market price, and that's why we are seeing a fall of 4.5% in this particular counter. What Elara is saying that they keep their FY24 EPS estimates unchanged and raise it by 1% for FY25, but that's on the back of the higher revenue growth in their mobile phones as well as IT hardware. So just a 1% upside or 1% revision on the upside when it comes to the estimates for FY25, and that's why we are seeing this particular counter down in trade as of now.
Okay, keeping an eye out on Dixon Tech, but a stock that has done wonders on a YTD performance, especially when you look at it, is MapmyIndia, almost doubling on a YTD basis. Nagaraj, what are the charts now indicating for this one? Are you expecting more of an upside, or should one start booking the profits?
I think the more upside is likely in the near term, because if you look at the longer term charts, this stock has been a continuous uptrend over the last many months, and high tops, high bottoms, overall positive chart pattern, and the outperformance of the stock against the benchmark index is clearly indicating that there is a strong stem left for the stock some more. And I'm expecting this stock to move up towards the next overhead resistance of around 2270, 2280 levels in the next 1 to 2 months.
Okay, moving on, and one such counter that is definitely supporting the markets today, that is Reliance. Ankita, tell us why is that so?
That's correct, Shrishti. Reliance is supporting the markets. It is up almost, it rose almost 3% in trade today, up 2.4% right now. It is, of course, on the back of the quarter two results that the company posted, but also on the back of the fact that the two top brokerages are pretty upbeat about the stock, and that is, Nomura, that is maintaining a buy on the counter with target price of 2,925 rupees, and they feel that the results were in line, reflecting healthy growth across all sectors. If you look at the O2C segment, the robust refining margins have partly been offset by the decline in the petrochemicals, but on the Reliance Jio front, there have been strong net subscriber additions and a modest ARPU growth. On the retail front, there has been robust growth along with margin expansion, and the net debt has moderated and the FCF remains negative, and on the back of that, they're maintaining a buy on the counter. Also, Jefferies came out with a note, and Jefferies is also maintaining a buy on Reliance, and they've hiked the target price to 3,000 rupees from 2,975 rupees per share. They feel that, the EBITDA rose 8% on a sequential basis and was marginally ahead of the estimates on the retail front. They also feel that, the retail throughput per square rose 10% on a sequential basis, driving the operating leverage for the retail segment. And also the Reliance Jio saw healthy subscriber adds, but the ARPU missed on the adverse mix. So, they see the risk reward to be favorable for this particular counter, and Jefferies is also maintaining a buy. So on the back of that, we are seeing an uptick of almost 3% coming in on the stock.
Okay, keeping an eye out on Reliance, and obviously that's an heavyweight, so pulling up the markets as well. But let's move on. And Nagaraj, Spandana Smurti, I think you've not spoken about this before, at least in a short while right now when you compare it. But what a move, right? At the stock last 6 months, 42% return, moving up from around those 600 levels to today at 900 levels. What's the view on Spandana Smurti?
Yeah, we is positive. Certainly, this stock has witnessed a decisive upside breakout of the 850 levels. What we can observe over the last many months is whenever the stock has shifted into a consolidation, eventually the stock has witnessed a decisive upside breakouts in the past. And currently, this is exactly what happening over here. And after witnessing a rate action over the last 3 months, around the resistance of 850 levels this week. Last week, it has witnessed decisive upside breakout. I think this upside momentum is likely to continue for this stock, and next overhead resistance to be watched for this stock is around 1,000 rupees, which could be achieved in the next 1 month.
Okay, moving on, and let's keep it going with the financial space then. And Harsh, IDFC First Bank, that's the counter that you have picked up. Tell us, why is that so?
Well, yes, so Srishti, let's talk about IDFC First numbers first off, because that's what's really keeping the counter in focus. 3.5% lower, despite a steady set with regard to its margins. But, essentially those margins not translating to higher profitability. The ROAs have come off sequentially, and in fact, even we're seeing a slightly heightened sense when it comes to slippages. The gross slippages have gone up to 3.1% versus 2.7% number Q1 FY24. Therefore, asset quality has also come into focus, even though not meaningfully. What we're also seeing with regard to management commentary, though, while loan growth is quite strong, so those numbers already disclosed, but when it comes to management commentary, they seem to suggest that there is asset quality is unaffected, and especially on the personal loans and unsecured side as well, there doesn't seem to be any concern. But despite that, you're still seeing that 3.5% dip on the stock.
Okay, keeping an eye out on IDFC First Bank, but keeping with the group, and Nagaraj, you picked up IDFC Limited. What are the charts indicating for IDFC Limited now?
After witnessing a sharp up move, the stock has moved up like in a sharp upside momentum with witness, and currently showing around distribution kind of a pattern at 130, 135 levels. Made an attempt to break above that pattern and not able to move above that resistance, and eventually slipped into decline. Overall chart pattern is not looking that much positive, and I'm expecting a downward correction to continue for this time. It has broken below the supports of weekly 10 and 20-day EMA, and currently trading below that support. And I'm expecting this stock to reach down to the 100 to 102 level, which are the next set of supports in the near term.
Okay, keep an eye out on those levels for IDFC Limited. Let's move on and talk about NOA Wealth. Why is this one on focus today? Look at the stock price jumping up as well because the company's profits jumped up as well, as much as 57% on a year-on-year basis to 145 crores. The consolidated revenue saw a sharp uptick of 29% year-on-year basis, coming in at 492 crores. Clients too have surged over and overall, when you're looking at it, they're growing at around 21% on a year-on-year basis. So yes, that's what's keeping the stock a buzz as well. Strong up move that we've seen coming in the stock and strong uptick that we've seen coming in, whether you look at the profitability of the company, even the revenue growth of the company, and in terms of clients addition as well. We've seen a good growth on that front as well, keeping the stock a buzz, up 3.7% as of now.
Okay, moving on, and Nagaraj, the next counter that you have picked up is RBL Bank. Tell us how the chart's looking like for this one.
Yeah, this stock was showing some distribution type of a pattern at the higher levels, and it has witnessed a good momentum from straight away from 140, 150 levels to 230, 240 levels. A continuous up move was seen in the stock without showing any reasonable downward correction. Recently showing downward correction of the range movement, downside breakout of the range movement at the higher levels around 250, 255 is a strong resistance at this point of time, and thus this stock is likely to correct down further. Important supports are placed. The trendline support one can say around 195. I'm expecting this stock to reach down to those supports 195, 200 levels in the next 1 month.
Okay, that's about RBL Bank, but let's talk about Ujjivan Small Finance Bank. This particular counter is seeing cuts of around 4.5% in today's trading session, and that's after Kotak reports where they have downgraded this particular the rating on this particular counter to an add now, while they have raised the target price from 50 rupees earlier to 58 rupees. And what Kotak is actually saying on this particular counter is that the return ratios hold up in spite of the margin pressure. The company has reported a strong return ratio this time around, but the NIMs expectedly saw some pressure during the quarter. Their business momentum continues to be strong across the segment, but they have downgraded it to add from a buy rating earlier as the valuations have expanded, and they prefer the holding company over the bank, which is now available at a 17% discount, and that's why Kotak has downgraded this to an add from a buy rating earlier, and hence we are seeing the cut of 4% in discount.
Okay, surely keeping an eye out on that one. But let's move on and talk about the next stock that is in focus, and that is on the back of technicals, is IRFC, that's Indian Rail Finance Corporation. Nagaraj, when I'm looking at it, specifically since August, we've seen a very sharp run-up coming in on the charts and a sharp spike up that is seen there. Last 6 months, 115% return in just 6 months, right? What is the view on IRFC, this run-up that we've seen since August? Do you see that it continuing now?
Yeah, view is currently showing a consolidation, but the long-term view remains intact. What we can observe in this chart, long-term chart, says the sharp upside momentum and limited decline. The decline is coming in the by the way of around sideways range movement. That is a more of a time correction rather than any significant price correction on the downside. This is what exactly happening over the last couple of months, and this stock is recently showed some signs of weakness, but bounced back from the lower levels. There is a strength for the stocks. Eventually this stock could move up from here low levels from here onwards, and I'm expecting the stock to show upside breakout of the current consolidation around 78 to 80 levels. That is one can look for the upside breakout, and on that upside breakout, significant upside momentum is going to take place. On that occasion, 90 could be the next overhead resistance for the stock in the coming months.
Right. Okay, let's move on to the next one. And Harsh, SBI Cards 2 in focus today. How are the numbers looking like for SBI Cards this time?
Well, margin contraction, Vinny, and we continue to see that even for SBI Cards, where we are also seeing ROAs contract on the back of that. OPEX continues to remain elevated, and you're seeing slippages which also continue to be higher than what the company had actually guided for. And therefore, you're seeing credit costs also continue to trend higher. Now, management commentary coming through suggests that credit cost will stay in the current 6.5% kind of a region, which was earlier guided for at around 6% or thereabouts. So you're going to see credit costs which are going to remain higher for longer, and you're also going to see rates which are going to drag down margins. So what they're suggesting is Margins have declined, will continue to remain as is. Revolver rates really haven't picked up. And what we're also seeing is EMI as well as revolver, both have not picked up. So couple of negatives coming through for SBI Card on the back of those numbers. You're seeing 5% decline on the stock.
Okay, moving on then, and Ankita, Vodafone Idea, this particular counter is seeing stellar gains of around 7% in today's trading session, just ahead of its Q2 FY24 earnings con call. Tell us why is that so?
That's right, Shrishti. We are seeing Vodafone surge in trade today. It's up almost 7% in trade. Now, we do have the analyst meet today, so we do see some buying coming in. But on the result front, the results were rather disappointing for Vodafone. I mean, the only positive thing that we did see coming in there was the growth in the ARPUs and the growth in the number of 4G customers. But besides that, there was a complete widening of losses and decline in profits, and on the back of that, CLSA has also maintained a sell on the particular counter. They've cut the target price to 6 rupees from 7 rupees, and they said that the Q2 revenues and EBITDA were below the estimates. The ARPU did increase, but like I mentioned, the subscriber losses still continue. The high debt of $26 billion is still there, and the low capex spending is coming in for the company. And on the back of that, they're maintaining a sell. But today is the analyst meet, and we do see some buying coming on the particular counter, and it is up 7% in trade today.
Okay, let's move on to the next one, and that is Persistent Systems. Nagaraj, this one, compared to those large cap IT, this one surely has done much better. Do you see this outperformance compared to large cap ITs continuing for Persistent Systems?
Yes, of course, this stock is likely to continue its outperformance compared to the large cap ITs as well as benchmark index. I think what this stock has done over the last 1 year is structural upside momentum, limited declines in between, and clearly showing signs of strong momentum gaining its above the hurdles. So currently, after moving out, showing a range bound actions towards the decline, this stock has bounced back from the support of 10-week EMA around 5750, 5800 levels, and currently placed around 6060, 6062 levels. I'm expecting the upside momentum is continued. Just it has broken above the hurdle of around 5850, 5900 levels, and further upside momentum is likely to continue. On such occasions, I'm expecting this stock to move towards the next strong resistance of around 6400 levels in the near term.
Persistent, but Nagaraj, another counter on your radar is L&T Finance. Tell us how is the charts looking like for this one?
Yeah, L&T Finance and Holding has moved up a bit sharply recently, and even though after the dip, it has witnessed the upside momentum. Currently around 140 levels, showing signs of weakness. Selling pressure is emerging at the higher levels. So negative divergence is unfolding with the RSI. So overall chart pattern is showing that this stock could underperform in the near term. I'm expecting a reasonable downward correction in the stock, currently trading around 132 levels. I'm expecting the stock to reach down to the immediate support of around 120, 122 levels in the next 1 month.
Okay, that was L&T Finance and the view coming in from Nagaraj. Keep an eye out on those levels. But let's move on, and in our segment, Gretex presents SME Spotlight. Let's welcome Shiraz Ibrahim, MD at Transsteel Seating Tech. And obviously the IPO has opened up today. Shiraz, thank you so much for joining in with us this afternoon. Subscriptions opens today, going on till the 1st of November. Right. Exciting time, right? So, thank you so much, firstly. And, if I want to start by, let's talk about the company, right? If you could explain our viewers, one, what the company does as well, and what is the present positioning of the company as on date in terms of the domestic market, when you would compare.
Thank you for having us on the show. Every office requires furniture. And in India, it's a 40,000 crore market, which is largely tapped by the unorganized players. So our online model, powered by Google, has given us access to this segment, and we've been able to grow our business and supply quality office furniture to customers who've largely been covered by the unorganized retailers.
Also, I want to just understand a bit more in terms of what is the outlook that you're seeing in terms of growth that is there as an opportunity in the Indian market, specifically for the company. If you could specify a bit more in terms of that as well.
See, the India growth story is very much there. Our markets are growing at more than 20 to 25% on a CAGR basis, and we see amazing growth coming from Tier 1 and Tier 2 cities.
Okay, amazing growth that is coming in from Tier 1 and Tier 2 cities. But, anything in focus that you have specifically that we could talk about, like your expansion plans in the Tier 2, Tier 3 cities as well then?
Our Google-powered online model enables us to scale up very quickly. We are able to open an office and serve customers in Tier 2 cities within probably 24 hours to 36 hours. We see growth coming from Lucknow, Kanpur, many Tier 2 cities like that.
Okay, also I just want to understand in terms of your key customers that are there, and is it purely a B2B play that is the company caters to?
So we are there with you throughout your interaction with any business. We work with, supposing you take a flight, we are vendors to Air India and Indigo. If you take a loan, one of our customers is SBI. If you were to have an Apple Watch, it is assembled by Wistron, which is one of our customers. Healthcare, we work with Fortis and Manipal. So we are with you throughout the businesses. Ours is a direct-to-business company. We are partial towards online customers who reach out online.
Okay, also let's talk about a bit on the financial front as well, right? FY23, 59 crores is what your top line came in at, and last year it was just 28 crores. So almost, doubling in terms of that versus last year. What's led to the strong uptake? Was there some additional orders that have come in for the company as well?
It was actually our online pivot and the digital model of ours which got us access to small and medium businesses. We were able to get a large number of opportunities, which we almost converted 60% of that, because we've been in this line for almost 28 years and our expertise in that got us the conversions.
Okay, and let's talk about the bottom line as well, right? In terms of the profits of the company, that was at around 9 crores in FY23. A significant rise that we've seen there as well. Any key specific reason for that, for this uptrend that we've seen in the profits?
Is again the customer segmentation which got us a rise in profits. We were able to target mid-sized companies who were being mostly serviced by small retailers, and it was with these customers we were able to command a premium in terms of our products with our corporate build quality and our experience.
Okay, and also just in terms of, if I want to understand your capex plans, obviously what is that, with the IPO coming now, what are your capex plans, and could you tell us more in terms of the IPO use of these funds as well?
So most of our capex, we are planning to use it for die jigs and fixtures for chairs, some machinery expansion for our woodworking facility, plus for working capital and general corporate purposes.
Okay, and just in terms of the outlook on the margins, where do you see that headed from here on? Do you expect a further growth coming in the margins of the company?
We are very bullish on the margins. We are focusing on operational efficiency to improve our margins. We also have plans to diversify our product range. Exports of green and sustainable furniture is one of the key growth factors which we think will drive our margins better.
Okay, that's where you see, obviously the factors that will be driving the margins of the company as well. And, just in terms of the opportunity, is that something you would look on the domestic and global front? What is the opportunity you're seeing for the industry and for the company?
Globally, ours is more than probably a $40-50 billion industry. We see huge opportunities for India in this space. Basically, the world is moving away from China. India is seen as a preferred sourcing of furniture. Export of furniture would be a key driver of growth from all kinds of furniture in India, and we hope to take part very actively in the export of office furniture going forward. Our domestic market also is growing very well. We see tremendous opportunity for office furniture in worldwide and in India.
Okay, and just anything specific that you would want to tell us in terms of how much is the IPO proceeds actually going to be this time? So, to get a breakup in terms of the division of the IPO as well, how much amount is going to be used?
We would see about, we plan to use the IPO for growth. We would look at roughly about 40% towards capex for enhancing our factory and delivery capabilities. We would look at increasing our retail footprint in Tier 2 and Tier 3 cities, refining our digital model a little bit more so that we could reach our customers faster. Plus, we would look for working capital and general corporate purposes.
Okay, Shiraz, thank you so much, for joining in with us this afternoon on ET Now, giving us an understanding in terms of what we should be expecting from the company in terms of the IPO. And good luck for the IPO,
Thank you
Shiraz.
so much. Thank you for having us on the show.
Thank you. And on that note, viewers, let's just slip into a very short break. Don't go anywhere. We'll be back with more stocks after this break.